Hello and welcome to today's virtual coffee talk webinar. My name is Margaret and I will be your web host for today. We have a few housekeeping announcements and then I will introduce our speakers. As a reminder, in order to earn CPE credit for today's session, please stay connected to the webcast for the entire program and participate by responding to at least 3 of the 4 interactive questions. Second, there will be a course evaluation which will open in a new window upon exiting the webcast at the end. And with that, I will introduce our speakers. Kevin M. Jacobs is a managing director with the Alvarez & Marsal Tax in Washington, D.C. and the National Tax Office practice leader. He brings more than 15 years of experience in tax matters in both the public and private sector. Kathleen King is also a managing director and national R&D practice leader with Alvarez & Marsal Tax in Washington, D.C. She specializes in assisting clients in the process of claiming domestic production, deductions, documenting, and sustaining tax incentives. Finally, Kevin DeYoung is a lead product manager with Wolters Kluwer Tax and Accounting. He will be showing us today how to find additional answers and resources using CCH Answer Connect. Thank you. Kevin, take it away.
Great, thanks all, and thanks for joining. And we know that the title of this is Form over Substance and Understanding the Latest Changes to the Draft 6765. We've had several virtual coffee talks talking about the recent landscape as it comes to R&D credits, whether it be the actual credit, the 174, what is the implications of the election. And so really it's a matter of why now, why are we having another one, haven't we heard enough? And the answer is no on all fronts. And the reason for it is because the IRS continues to provide guidance or lack thereof by virtue of either not answering questions, whether it comes to application of 174, or how do they plan to administer R&D credit claims to changes in the most recent forms that they're having. And so we're planning to walk through and provide a background on the revisions to the form in which you claim the credit, a walkthrough of the actual form, highlighting some of the questions that it poses and some of the hazards it provides. And so it's more of a, hey, when you're going through and setting up your information and trying to track this information, what should you think about as far as amassing, putting it all together? So at the end of the year, you don't have what's affectionately referred to as a shoebox return, which is just literally, it used to be a shoebox where people just threw in all their receipts and just handed it. But instead to say, okay, I now understand what's going to be asked of me. Then we think about key areas of consideration and what are planning points, right? That's obviously something that's near and dear to all of our hearts. What should I be knowing about now before the year is up? Obviously, people are still thinking about, okay, I haven't necessarily filed my 2023 returns because you might be on extension, but thinking about what we might do, especially considering that there's revisions to the form on a go-forward basis. And lastly, Kevin's going to show us everything we need to know on Answer Connect and what we didn't answer, how we can find. So with that, Kathleen, why don't we start going through the background on some of its changes?
Sure. Thanks, Kevin. So we're going to just go through the evolution of where we are, and it is still a draft form. I think that, so it's very possible that in terms of some of the things that we talk about today, it may not actually end up getting published, in particular for 2024 tax returns, although that's the goal right now. Although I would say at this point in time, there has been enough comments received, enough press to forewarn taxpayers that this is out there, that I think it's fairly unlikely that the form is not going to be implemented with some of these changes, even for the upcoming filing season next season. So I do think that, again, it is likely that there will be at least a good chunk of these changes that we need to be accounting for. And the reason why we're talking today, even though it's still a draft form, is taxpayers need to understand what these forthcoming changes are, so that if you think about how you're collecting data today, that if there's any changes that you need to implement in order to be responsive to these changes, that you have those in process. So again, where did this all start? There was a tax court case for Harper. That was an S corporation. The question was really, what is a valid claim? They had filed an amended return, and in filing that amended return with a research credit claim, they provide a fairly generic description in terms of why they were amending. And the IRS felt like they had not complied with the information required, the sufficient facts necessary in order to have a valid claim. And in a response to that particular court case, because again, the court basically said, IRS, if you don't ask for this information, then you can't hold taxpayers accountable for providing it. And their response was they issued a chief counsel memorandum related to claims, so related to specifically amended returns. And as a part of that process, they significantly increased the amount of information that they were looking for on amended returns in order for it to be a valid claim. Now, the form itself did not change with this memorandum. And so they issued some guidance that, and it's been evolving. There were other changes that came even in June of 2024 related to this claims guidance, but they provided examples of what they expected in terms of attachments and the granular level of information. And so there was talk of even last spring, so a year ago spring, about that they may be looking to change the Form 6765 in order to incorporate some of the data points that are now being required under this new program for amended returns. And so in September of 2023 was where they issued the first preview of a draft Form 6765. And at that point in time, they requested that taxpayers submit comments, and there were a number of external providers. There were different organizations that also responded on behalf of taxpayers to give some feedback in terms of what this preview was showing in terms of the forms. And so that initial request for responses was in the end of October of 2023. They issued another publication. They published it in the Federal Register, again, requesting comments on the form. And that resulted, again, in the latest draft form, 6765. Again, that's proposed to be effective for the 2024 tax year, at least in part, with changes that may follow in 2025. So, Kevin, if you go to the next slide.
Well, I thought maybe, so a few observations just going back to, my prior IRS life. And, the process of form review is actually really interesting because it's a coordination of, what is viewed as the Internal Revenue Service, who is, the people that do the audit and enforcement, as well as Internal Revenue Service Chief Counsel, which is technically the attorneys for IRS, and they, in essence, review the forms and try to make sure that it's all correct. Now, when the Chief Counsel memorandum was issued in 2021, it, as Kathleen noted, it did send shockwaves. Now, the interesting part was it specifically provided this is the new guidance that was required for amended claims, but it didn't require any of this new information with respect to original claims, which was a head scratcher because there was never any statutory differences between an amended claim and an original claim. And so as such, you can imagine the community said, wait a minute, what's going on here? A, do they have the right to do this? And B, is this going to become the new standard? When you saw the new form proposed changes in September in 2023, it really called to question as to whether or not they were possibly going to try to rush to finalize this in 2024. As Kathleen noted, right, I mean, there was a whole host of comments. They've provided thoughtful discussion and engagement with the community. We saw the notice, and now we've seen a new revised draft. Now, the circulation of multiple documents with respect to a form before it ever becomes final is a little bit odd, right? And so what this looks like is it does provide some insights that they are actively engaging and they're trying to be thoughtful, at least with respect to what they're asking for. Now, while Kathleen was speaking, we did get a question as far as whether or not states are going to implement some of the requirements that we're going to be talking about. And the answer is, it's really unclear. It's not clear as to what is the basis for all of these requirements. It's also unclear whether or not the states are going to similarly adopt all of these requirements. Normally, states have their own choice as to what they do. Many of the states require you to attach your federal return. So if you're attaching the, at least parts or all of your federal return, that's going to already have that information. It just may not be allocated. But be mindful that, this is just the tip of the iceberg or the start of it, right? Once the IRS finalizes everything, that's when you might see further changes on the state side. I don't know, Kathleen, if you have further thoughts on the state side as we continue to talk about the latest changes.
I would be surprised if some of the states don't start to follow suit. I thought it was interesting. There were some questions that one of which was they've now removed this in this latest draft. But one of the questions was, is the business component a new or improved product, process, or system? Is it new or improved? That's a question that Texas, as an example, has been asking for years as part of their standard IDRs and franchise tax audits. So, they were one of the first precursors to ask that. Again, it's been removed from this form. So again, more standardization, more information. I won't be surprised if it comes. I think that it's interesting when you look at the press release that came out with the first version of the draft form. There were 2 points that were made in terms of what are the IRS goals in doing this. And one was they felt like they were helping taxpayers by providing them a consistent and predefined format. So they're basically saying, we're letting you know what we're looking for. And I would tell you that even if this form change doesn't come through, the IDRs that they're issuing at this point in time, this is the data they're asking for. And so same thing with what they're currently is being requested for amended returns. Again, most IDRs are following that type of format. The second point that they made, though, is they feel like the data that they're now requesting on this form is going to help the IRS manage R&D credit issues and resources internally. And they specifically stated that, and I found this interesting, that these potential changes could help in the use of enhanced data and analytics to be able to select the highest risk cases. So clearly the intention is that with this additional information that's going to be selected, there's going to be some thought put into how they can identify which taxpayers they should be selecting for examination. And again, at this point in time, it's very difficult to predict what that could be. But again, IRS and Treasury, they received a significant amount of comments in terms of what was maybe particularly challenging about the forms. I think the overriding response that came back is, and it was really almost comical in terms of that they were saying that, yeah, it's only going to take you about 7-8 hours to complete this form. But for any large corporate taxpayer where they were asking for, again, documentation for every single business component that they worked on, the burden was obviously significantly greater than that. But again, the overall takeaway was this new form is asking for increased qualitative information. So not just the numbers, but more information in terms of what's being reported. And then also a lower level of quantitative information for the business components that are being reported. The good news with this latest round of the draft form, though, is there was progress. So the voices of all the commentators that submitted changes, it was heard. Probably the biggest takeaway is that taxpayers are no longer required to report all business components on the form. They have now limited it to either 80% of the QREs or no more than 50 business components need to be, again, specifically called out on the form. They have delayed the effective date which we're going to talk about in a few more minutes in terms of the more onerous sections of the form. So, 2024 is not the year that the heavy lift is going to be required. But as we're also going to talk about, there are some questions on here which really make it important that you don't wait to the following year. And again, thinking about the concept of using the data analytics and the enhanced data information that's available, one of the things they may be looking at is there inconsistency between the years in terms of the number of business components that are being reported. So, if you say that your total business components are, 10 in one year and it jumps to 1,000, I think there's some expectation that there's going to be variability from year to year, but those large variances in reporting may be something that they're going to key in on. One of the most important things that have been eliminated are the requirement for narratives in terms of the information sought to be required. That's something that is required for amended returns. And, I had someone ask, well, why is it still in the form if they're planning on eliminating it? And again, my expectation is they are planning on expecting that to be completed for amended returns. So in terms of some miscellaneous changes, they did eliminate the requirement that I mentioned earlier about indicating whether a business component was new or improved. They have eliminated the requirement to identify the business component's use. In other words, is it for internal use by the taxpayers? Is it intended for sale, license, lease? They've reduced the selection for the business component type. So business component type is, is it a product? Is it a process? Is it a formula? And we're going to talk a little bit more detail again about the importance of how you label that, because there is some case law out there that may dictate why you may want to lean one direction or another in terms of how you were identifying the business component type. They also then narrowed the definitions for officers and controlled group reporting. So again, simplified it in a variety of ways, but still as we go through the form, you'll still see that there's a number of changes there. So, I didn't know how to label this. I'm not sure that some of these are necessarily unfavorable reporting changes, but if the first page is, what are the positive developments? I guess these are things that I would put as either neutral or negative developments, meaning that they're negative because they didn't get changed. The first is that even though they have now limited it to only up to 50 business components, that still can be a heavy lift in terms of trying to come up with the business component determination, coming up with the descriptions, coming up with costing, again, all before you file your tax return at this point in time. So there's still a lot of work that's potentially required for this. The other thing that I would point to in terms of something that I think is going to require a lot of thought is just how you are going to separate the qualifying wages between the buckets of what's direct research, what's direct support, what's direct supervision. I think that's something that, in prior years, it's never mattered. That was part of the commentary in terms of why are you asking this? It doesn't matter. But there was a court case called Little Sandy Coal that kind of raised this question as a focus point in IRS exams, and so it is still on the form. It's something new that hasn't been previously reported, and so taxpayers need to be thinking about that. There was also a lot of information that even where they said that, yeah, we're going to reduce the number of categories, they did not issue the form instructions with the latest version of the draft form. So the nuances in terms of how some of these lines and sections of the form should be completed are, haven't been, fully explained. They also have not addressed how statistical sampling is going to be applied here. Do you do it based on your sample items? Do you do it based on the actual population that you started with? So questions in terms of how to be responsive to stat sampling, which is a technique that many more taxpayers are starting to use just to kind of help hopefully mitigate and reduce the burden of the reporting requirement that's out there.
Yeah, and so we're going to launch our first polling question of when do you expect the revised form to be required for taxpayers' use, even in part? Is it in 2024, 2025, after 2026, or never mind, it's just still burdensome? The one thing I'll note, and this is something that's important that Kathleen touched on, which is even though the form still hasn't been final, we are seeing this in some part with regards to IDRs. And so just because some of the aspects haven't been finalized as of yet, this doesn't stop the IRS from actually requesting this information and saying, we're trying to evaluate whether or not you have the R&D credit eligibility. Now, the only other thing just to also note is it's not a surprise that they're trying to highlight the fact that, oh, we're trying to streamline the process. As we've talked about in the past, the IRS continues to think through how to do more with less. IRS funding continues to be a hot button issue. Obviously, when we talk about the upcoming election, we'll have discussions as to what is the role of the IRS under former President Trump or under Vice President Harris, as far as what that would look like in the future. But either way, it's going to continue to be a question of, with limited resources, how can the IRS effectively administer the tax code? With that, Kathleen, why don't we start walking through the draft form?
Sure. So I created this table hopefully to help visualize where we are in terms of what's changing and when those effective dates are coming into play. So sections A through D are what we've been using for years now in terms of the standard reporting requirement for the research credit. There's a section for the regular credit. There's a separate section for the alternative simplified credit. There's some calculations of some just basic information that needs to be reported, and then the QSB payroll for small businesses that may be eligible for that. Those sections are all by and large intact. There are minimal wording changes that are in there, but generally speaking, they're the same as what you've seen in prior years. What they've done with this new background questions that's at the very beginning of the form is they've basically taken a couple questions, and it's only 2 questions, and they've moved them up to the top of the form. The first question relates to the election for the 280C. By the way, I can't think of any reason why anyone should ever check yes for electing the 280C anymore. So just, my advice would be to check no, but it's very easy to see that now in terms of the election. And then there's a question about whether or not you are part of a controlled group of companies that need to do a single credit calculation. So those are the 2 questions that are in the background section of the form. Those questions, again, fairly straightforward. Those would be expected to be effective for 2024 returns, as are the ones that have always been on the form. And then there's some new sections that we're going to talk about. Section E in particular is the one that I would highlight in terms of where do you really need to be thinking about how you're going to answer these questions, because this is effective for 2024, at least as of right now. Section G is, again, currently it's optional for 2024 returns, but it will be mandatory for 2025, at least as of now. Section F, again, is only applicable for taxpayers that are not required to complete Section G. So, and again, they did spell out some exceptions for some taxpayers that are no longer required to complete Section G. And those tend to be just small businesses. So if you, again, are a QSB, or if you are a taxpayer with less than $50 million of gross receipts and less than $1.5 million of QREs, then you are not required to complete Section G of the return, and you would complete Section F. But again, very limited call out for small taxpayers in terms of the more detailed requirements.
Yeah, and when you going back to the background questions, I mean, it's not a surprise that they're trying to call this out, and there's actually some interesting background that's helpful there, which is, the IRS does always try to help identify areas in which they need improvement in the administration of the Internal Revenue Code or changes to the Internal Revenue Code, and there's this ongoing discussion that they have with Congress as to what are they observing. Now, with regards to the 280C, obviously, this is something that we've talked about a lot, and Kathleen just noted many people, it's anticipated almost everyone will be filing a return saying we have not made the election. That's information that the IRS can then share with Treasury and Congress to say, look, this is the returns that we've gotten. This is the amount that's possibly here, and in the aggregate, this is the potential tax that's actually being given away or avoided by virtue of the changes that were not made as part of TCJA. So as a result of that, you do have that information. We have seen use of questions. So for example, in the individual returns, you can think of the question of, do you have any cryptocurrency or digital assets and has it been disposed of? Those questions have been hotly contested, and what are the implications? And for those that are in the crypto or digital asset space, you can see that there's been a lot of guidance in that area. And so depending on the answers that they get as far as the control groups and the like, you might anticipate even further developments in the guidance. And so they are trying to use this not only for, okay, how do we look at the returns right now, but how do we view, or what should we be telling Congress on a go-forward basis that they should be aware of?
So section E, again, and right now the intention is this is for 2024 returns. So, we're more than halfway through 2024 at this point in time. I guess the biggest question mark that I would highlight is number 37. And they are asking taxpayers to tell them how many business components generated the QREs. So that is beyond, they're not asking for, how many are you going to list on form or section G of the form, which is the 80% of the QREs or no more than 50. They are asking for the 2024 return for taxpayers to indicate how many business components they have. And so that really means taxpayers need to be thinking about now how they're going to answer that question. And how, again, if you have certain teams or groups that, maybe they're direct support type areas of your organization, and, there's a question whether, are they separate business components? Should they be allocated? How should they be allocated or otherwise attributed to other business components? This is a question that needs to be asked in the near, or answered in the near term. And so don't lose sight of the fact that the total number of business components is something that is coming in 2024. And that's important because, again, once you get to 2025, where you're providing the additional level of detail that we're going to talk about in section G, if all of a sudden you're going from, again, one business component in 2024 to 100 business components in 2025, what we don't know yet is that something that may, again, in some form, trigger at least IDRs or questions or some sort of notice from the IRS, kind of saying, and we've been seeing them come through for some of the statements that are added for uncertain tax positions, so the UTP schedule, it may be something similar to that. So it's really not triggering an audit, but it may say something like, are you being completely responsive here? And so I would flag that. The other two questions on here, which I find very interesting, is, again, they are asking taxpayers to indicate whether there was an acquisition or disposition of a trade or business. And they're asking for whether there are new categories of expenditures that are being reported. Both of those items would mean that there should be some sort of base period adjustment in order to account for those changes. Again, as of right now, they're not asking for the base year information in detail on the return. It's still a cumulative ask. for the QREs across the 3 years. If they ever move to trying to request that information, again, that could be a data point that if you check either of those boxes, yes, they would want to make sure that they see those adjustments happening in the prior years. And again, consistency requirement is something that, because there's a couple of court cases out there that specifically say this is an incremental credit. You have to be consistent in your treatment of expenses. If you do not follow that or not able to show your base information, then you're not entitled to a credit because you haven't met the basic burden that's required here. Now, Kevin, quick question for you, just to kind of get your take on, some of the questions that I've gotten are along the line of, what if we don't completely fill out the form? What does that mean? Like, do you have any sense in terms of, what is compliance with some of these questions? And, what's your thoughts in terms of how the IRS may try to respond to that?
It's always an interesting question as to what does it mean to file a form, and being able to say, okay, I've provided enough information for the IRS to administer the tax code. There are certain provisions and case law out there as to what is the bare minimum necessary in order to avoid penalties and start the statute of limitations. And so really it's a facts and circumstances type determination as to what was the information that wasn't provided. Was it absolutely necessary? Could the IRS have the information some other way, and the like? So obviously taxpayers are encouraged to fill out the information to the best of their knowledge, as opposed to intentionally skipping any questions for fear of what it may do, because that's starting to get into like intentional disregard area. But if you fail to file, then this is where you might be able to say, okay, I did the best I could. I didn't necessarily provide everything, but I didn't necessarily appreciate everything. Should I be okay? I do want to say, looking at the question 39, did you acquire or dispose of any major portion of a trade or business? That does tie to other different aspects of the tax return, right? So if you acquire a major trade or business, you might looking at a potential increased depreciation. So if you put no here, but then all of a sudden your bonus depreciation is skyrocketed, you could see potential inconsistencies. Similarly, on dispositions, you might have something on your cap gain schedule or sale of assets. So this is going to really be a tick and tie, and really it'll be hard to sort of say, okay, I'm going to be claiming or showing these things, but not also claiming this. But as Kathleen said, it all flows to the R&D, but they're trying to make sure that you're providing a cohesive story.
So again, moving on to section G, and again, this is the one that's optional for 2024. It would be, again, as of right now, mandatory for 2025 returns. And this is really where the business component breakout is being reported. Again, it is somewhat unfortunate that we still don't have the instructions to the form, because I'm sure there's a lot of subtle points here. One of the things that they specifically noted in the press release is that they expect the business components to be basically in descending order. So what's your business component one is your biggest business component in terms of qualifying expenses. That's nowhere on the form. Again, they may expand on that when it comes to the actual form requirement, but that's something that they mentioned. One positive development that I noted, and I think taxpayers and providers should look at, is in 49C, they added what we have in boxed in red there, where previously it just said, give the business component name. They've now added an OR that's a unique alphanumeric identifier. And I think this is really important for a couple of reasons. One, there are taxpayers that are concerned that, again, R&D is their lifeblood. It is their future. It's what's going to, continue to bring in new customers and keep the ones that they currently have. And so the work that they're doing from a developmental perspective, they guard very closely. And so from that perspective, there's some concern in terms of, they just don't feel comfortable disclosing some of that information. The other thing, though, to keep in mind is that the reality is, again, the tax department is not the one that's naming these business components. And it's, I laugh sometimes in terms of the names, the descriptions that show up in the system, because it could say something like super easy, we should have done this 5 years ago. And the implication is that it's a change that really shouldn't have taken a whole lot of time. It's a name that really is not indicative. It may say, production support in the title of the project, but the reality is it was production support because of major design change that had an implementation. And so if you use the names of your business components, that may set either, and it could be a positive or it could be a negative initial reaction in terms of, wow, the production shows up in a lot of these titles. Maybe that's something that would create a higher risk just by looking at the titles. So I would certainly encourage companies to take a look at that particular option. If your systems currently don't have a unique alphanumeric identifier for business components, I think that's something that every taxpayer should be thinking about, and every provider. How am I going to implement that so that I have good books and records, in terms of the work papers that are available to be able to report that on a return? So again, other things on this particular form that I would highlight, and we're going to talk about this for just a couple minutes, is they really are calling out, software and what that means. And they're really, when they're talking about software, they're not so much looking for software for sale. They're looking for internal use software, and they're trying to figure out, does it fall within the dual function software category? Because again, if it's internal use software, it is a higher risk from their perspective. So again, we're talking about how a lot of this is risk assessment. If you're now having to categorize something as IUS or not, this is one of the boxes where that's going to fall in. And I think it also begs the question, in 49D, where they're asking about the business component type. Again, that's where they're looking for either product or process, or there's going to be a list that they're going to explain in the form that hasn't been, or excuse me, in the instructions that haven't been released yet. It'll be a drop down that you can select for the category. But if you think of the implications of the Union Carbide case, what the Union Carbide case has the IRS arguing is if you have a process business component, then you can't claim supply costs. So if you have significant supply costs, then you really need to be thinking about, wow, if I flag this as being process and not product, am I creating issues? And again, keep in mind that all of these costs, so whether we're talking wages or we're talking supply costs or a computer software, it's going to be on a business component basis. So that could be an immediate flag for them. Wow, you said it's a process, and I see all of these supply costs. That would create a higher risk from a reporting perspective. So there, again, Section G is 2 pages long of the new form. We went through the first page. The second page is, again, where we have the breakout in the different types of where these salaries fall in. Again, I would emphasize for both 51 and 52, so your direct support and your direct supervision wages, those two categories of qualifying wages do not have to separately satisfy the 4-part test. So when you're claiming direct research, you have to make sure that 4-part test that we all talk about is you check all the boxes, but you don't have to do that for support wages and qualifying and supervisory wages. The only hesitation, I would say, why you don't want to just default everything to direct research is, again, that could look a little bit odd as well, upon an examination. And you just have to be thinking about, again, what is their role? Are they directly involved in the process of experimentation from a support perspective? or are they really driving that experimentation? So, polling question 2, Kevin.
Yeah, what has been the most welcome guidance provided with the form? The delay of the mandatory usage, the reduction in the business components, revisions to miscellaneous questions, or nothing? It's still burdensome. Kathleen, while they're answering, if you wanted to keep going on section G or start moving over to the keys area of consideration.
Let's go to the key areas of consideration, because I do think that these next two, couple slides here are really important in terms of what taxpayers, again, need to be preparing for and thinking about. We already highlighted the fact that, again, on section E of the form, you are going to have to actually commit to a number in terms of how many business components do you have. And so making sure that you're preparing for that is helpful. But really, as we're going into what is business component identification, there are several different aspects that I think are helpful for companies to kind of think about in terms of answering this question. So we started to talk about one of them, and that is the business component type. Again, product, process, formulation, using the drop-down box to identify. I mentioned the fact, especially if you've got large dollar supply costs, you really shouldn't be answering a process for those. But I think where it gets more complicated is especially for large new products where there is a build or manufacturing component to that. Do you need, it just begs the question, do you need to be able to separate that project into two different buckets? Because, again, you have the classic R&D engineering type design development work that's being done. And then you have, once that's designed, they have to figure out how to build it. And the reality is those two things are very hand in hand. That it's for most organizations, you are involving those manufacturing folks, whether it's manufacturing engineers, process engineers, it could be even plant managers. They are involved at the front end to make sure that the product that's being designed is going to be producible at, especially at scale. And so it again begs the question: do you really have two kind of sub business components that need to be accounted for? And again, keep in mind, there's not a whole lot of guidance on some of these nuances in terms of how those types should be applied, but it's just things that, again, to make sure that you're thinking about. The next question is just, what is the level of which, how are you measuring your business component? So assuming that you are an organization and you actually have really detailed project accounting that's available. I mean, that's great just from in terms of, I think it gives you a leg up in terms of being able to support what your qualifying expenses are and how to identify those business components. But oftentimes, when you look at the time reporting that's out there, it's not just at the project level. And then keep in mind, a project is not a business component. It does not say that anywhere in the guidance that's out there with the IRS. But you could actually have two different project codes, same exact, and I've experienced this, it's the same exact product that's being developed, but there are two areas of the organization that are funding that work. And so it shows up as two different line items in your project reporting. Those two things need to be combined together because it's really the same work scope. It's just different people are paying for different elements of the work that's being done. And so really kind of taking a step back and thinking about what is the relationship of all these different things that I have in my time reporting, my project reporting system, and how do they relate to one another? There's a question, if you think about it in the software context, do you do it based on the overall system? So let's say you have you're a SaaS business, so you have an online software that companies log on to use some sort of service that your business is providing on this SaaS platform. The question one is, okay, is the overall platform, is that your business component? I mean, arguably it is, because everything is interconnected. There's a single entry point. You could potentially argue that, but there's a lot of different subcomponents that show up here in the software context. And then you can even go down to the epic level in terms of how you're tracking this particular piece of information. So the business component type is important, as is the questions about really making sure you understand what are the exceptions from internal use software. I'm surprised even for a lot of practitioners that they do a lot of R&D work, but IUS makes some people nervous for some reason, and so they don't really dig into that. And there are a number of exceptions in the regulations that were issued about 10 years ago now that are very favorable. There's case law out there that will help you with this. But so making sure you really understand, do I truly have IUS, or can I do shrink back so that parts of my system aren't internal use software at all? I may have to create a separate business component because of that. But if you have a component that's really third party, externally facing, or maybe it's not externally facing yet, but you're hoping to sell it in the future, that may be something that falls within an exception. A dual function software is something that we've been seeing more questions come through on, especially for companies that do a lot of software development. Dual function is where you have a single piece of software that has both externally focused and internally focused functionality, and that's why it's considered a dual function. And you're now having to label that, your business component, as being dual function or not. So again, Kevin, can you go back to the prior slide for just 1 minute? And so again, making sure that I just wanted to touch on the documenting the 4-part test for the business component identification. Again, especially for whichever ones you're calling out on your form, just make sure as a part of your books and records that you have the 4-part test for a non-internal use software and the 7-part test for internal use software. Even if it's just, think of like an Excel form where you have a couple sentences that hit each of those requirements, because that is absolutely the way the IDRs are moving at this point in time. So if we, go ahead, a couple of slides in terms of just again, touching a little bit on the categories of labor and how these fall out and their interplay with the substantially all rule. Again, there's direct research, there's direct support, there's direct supervision. Again, there are some examples in the regulations that touch on what go on to each of these categories. But I think the way I always like to think about what's the difference between direct research and some of these others is think about the process of experimentation and how that's been explained in the evolution of the regulations under Section 41. And they talk about, where again you are, you're identifying a opportunity in terms of what you're going to evaluate. So it's a potential new component. So that you could be or a product that you could be developing. And so they're coming up with that concept, coming up with a hypothesis to test that concept. And again, think about what a hypothesis is. It's just answering questions in terms of what that's going to look like. The testing process. If you have individuals that are actually physically involved in testing, whether it's the design of the test, the conduct of the test, then arguably that is somebody that's doing direct research. They're not somebody that's doing direct support. Direct support, again, in the regulations are the folks like the secretaries typing the lab notes, a person actually washing bottles. So really think about, again, if you have technically trained individuals, are they better suited? Even if their title is QA tester, they may be more appropriately identified as a direct research person. And there's a lot of implications as to why that you may want to categorize it like that.
So we're going to launch into the next polling question, which goes to how you think the results of the upcoming national election will be on the guidance and the overall audit. But while people are answering it, Kathleen, obviously there's a whole host of miscellaneous questions that should be addressed. That still needs to be addressed. We've touched on some of those. In the time remaining, I think it may be helpful if we identified some of the potential planning opportunities that they could be thinking about.
Sure. So, and we've touched on a lot of these. I think the most important one is making sure you're thinking about and truly embracing what is your business component, and really, we're at the time now where you have to commit in terms of how you want to define that. And you need to look at the wage assignments in terms of, are you putting those in research, support, or supervision? Make sure that you understand those questions that are mandatory for 2024 returns. Again, at this point in time, the number one that I think you need to keep in mind is, again, the number of business components, and that all ties together in terms of how you're defining a business component. Make sure that you're thinking about the base adjustments, because they're clearly focusing on that with some of the questions they're asking in terms of, again, it's not just acquisitions and dispositions, but if you are including a new category of expense, and that can be a new category of activity or a new activity of cost, making sure that you're identifying those. If you have software, really think about, again, what those, what is internal use software, and whether you really need to label that work as internal use software. The last thing I would say on the IUS front is that, again, the IRS continues to work with MITRE. They are only supposed to be involved in IUS cases. So it's really important to, and it's a very difficult audit when they become involved. So just making sure that you're thinking about that.
Great. Well, thanks so much, Kathleen. Hopefully this information was helpful. As always, we'll keep you up to date on the latest and greatest developments as we're seeing. Stay tuned for our next months, but in the meantime, we now get to hear from Kevin and everything we should know about on Answer Connect. So Kevin, if you want to take it away.
Excellent, thank you. Just to confirm really quick, Kevin, you're seeing CCH Answer Connect?
Yep.
Excellent. So yeah, we're going to take a couple of minutes here and talk a little bit about how you can find some additional content, some guidance as this draft form moves through the process and becomes a finalized form. One of the things that we did when we created CCH Answer Connect is we really wanted to focus on how we can make the research process easier for the individual user, so that you're not running multiple searches, you're not jumping from multiple locations within a tax research platform in order to aggregate all the information that you would need to see to address the specific issue. So obviously for today, we're going to be spent a little bit of time on research credits. So we're going to actually run our keyword search here. Before I begin, I want to point out a couple of things that you'll start to notice as we start building out more and more AI functionality within our platform, where we're beginning to populate questions and answers and research topics. We're already working on generating AI responses. We began launching that a few months ago. So we're really excited about how that works. But what I want to do here is actually run the search for research credit specifically and give you a better idea of how the content is laid out within CCH Answer Connect. As we take a look at our research results, you can see many of them are done by relevancy, our research credit being our single highest document top result. And we're going to actually go back and take a look at that in a minute. What I also wanted to point out is the document types available to the left here. As has been discussed multiple times, this form is in draft state. So a lot of the content that we have on our topic pages will be sitting as it currently is required by the form. But within our news section, you'd have the ability to go in, and this is where a lot of the proposed changes and the discussions will take place as to what the revised form would potentially look at. But again, to continue with the research here, we're going to go into our topic page for our research credit. And really quick definition of a topic page. This is where we take content from multiple areas within the code and from the forms and various aspects, and we put them together in a single location so we can give you that overview of what the topic covers. For example, we're seeing at this topic page, we've got our general credit rules, where the author is going to be going through all of this. And kind of as a side note here really quickly, I actually spent some time on the phone with Kelly this morning. She's already working on creating the additional guidance. Once the draft form is finalized, we will be able to implement that immediately upon its approval. So kind of exciting to hear what the editors are doing in terms of this content as well. But we have the ability to look at the incremental research credits as we move down through here. We heard a little bit of conversation about the impact of the refund claims and some of the rules surrounding that. Again, all of that is covered on this same page as it relates to the research credit. Again, aggregating that content for you. As I move through my left navigation pane, I'm also going to drop down into recommended topics. And here you'll see we're at the high level of research credits, but there's many other subcategories that would fall under this topic that you would have the ability to take a look at as well. We also have our client impact information. For example, the research credit claims transition period extended to 25, some of that information that's out there. We then also bring directly to the researcher the applicable key primary sources. Obviously, we talked about Code Section 41. We're going to jump into that in a minute. But we also heard reference made to 280C. So as opposed to going out and having to run a specific search to find this additional content, the editorial team has brought it directly to you. You can now link into the code itself. Some of the productivity tools we have brought in our client letters, our smart charts, our practice aids. Again, all of this, once you've come up with your position and your understanding on the issue, how do you communicate that? Can you take your client's facts and circumstances and run it through a calculator, run it through a decision tool? Do you need to take a look at that election or compliance statement? So again, all of that is brought to you. We talked a little bit about the news again here through the navigation pane. We've brought in those forms and instructions. We also further build this out. So if you'd like additional learning, professional development, we do have our CPE courses also available specifically related to research credits. I'm going to jump up here really quickly back to our key primary sources. And I want to open up Code Section 41 because, again, this is another productivity tool in terms of the way we've presented content related to the code. You'll notice we have our tabs across the top, IRC regulations to explanations. We call this our 360 view. So again, every piece of content related to Code Section 41 is now brought to you without you having to go find it or click into different areas within the research product. Regulations are all here and available to you as well. The explanations, these will be updated again as the form instructions are finalized. We heard reference to many cases, rulings, annotations, guidance, all of that is also brought to you here. We talked about forms instructions. We also talked about tools. We brought them to this Code Section 360 view. One of the other two items I do specifically want to point out is that federal and state comparison. I know a question was brought into the chat regarding what will the states do? The beauty of what CCH Answer Connect has done is you can now go from this code section directly into the state in question and get the additional guidance that the state has either adopted, modified, or whatever they've done to the federal provisions. I'm going to open one more tab here and go to our More tab, because we also have information under our Tax Prep Partner Series, which is a content set specifically geared towards the actual forms themselves. So you have the ability now to go directly into whether it's 1120, 1120S for the corporate, as it would relate to this form, and get additional guidance, step-by-step procedures. Many of the things that were talked about on this presentation will also be covered in much, much more detail here as well. So again, wanted to point that piece of information out. Would love to spend some more time talking to anyone who's interested. I know we're running close on time, so I just thought I would wrap up with that. Margaret, I'm going to pass it back so we have enough time to take care of the final polling question.
Thank you, Kevin. That wraps up today's webinar. We want to thank everyone for their participation. As a reminder, CPE credit will be posted within 2 to 4 business days. You will receive an email with a link to the course evaluation as well as your certificate of completion. Today's webinar has also been recorded. You will receive an email with access to the link within 24 hours. We thank you so much for attending, and we hope you'll have a good day.